Good morning, UPBOptionMillionaires.com. It's Friday, December 19th, 2014. Quick market video. It's about 5 minutes before the market's going to open for trade here. Stock futures are higher, and we have crude oil bouncing off its lows that it hit yesterday. A nice pullback intraday. Again, it's spiking here to start the trading session. We're up well over 3%, and this is going to help put XLE up against, and look at XLE here, pre-market 78.9. I'll pull up the chart here. Looking at Goldman Sachs out today with a conviction sell rating on Seadrill. So the stock has fallen recently from $40 down to $10, and now it's a conviction sell. Up here it was, I guess, a conviction buy, and now it's conviction sell at the lows. Just assume that analyst working for Goldman Sachs is probably late to a lot of parties, so it's probably safe not have to worry about buying any alcohol or anything for that analyst. If you're having them over for a party, let's look at XLE. XLE is right up, and you can see this beautiful candle here. Coming up to kiss this former support line. It's acted as support in the past and resistance if you go all the way back 10-year chart here for XLE. You can see back here in 2008, 2009, just before the financial crisis, acted as resistance, and then we collapsed to lows here at the height of the financial crisis into March. We bottomed. Been rallying ever since. We came back to this line here that was former support resistance, acted as support, and then we broke below it. So now we're below this line here at the $80 level. If you look at what we did recently when we came down to that level, we bounced, we put in a really nice, and it looks better here on the 5-year chart, a nice bear flag. You can see this decline, nice flag here consolidating in the channel. We broke down out of it. That would be my only fear here playing for XLE for energy. For downside is that we could consolidate again into another flag pattern, which would take a week or two to resolve at least before continued downside. And of course, oil up, being up almost 3%. USO is up here, coming up to kiss this former support line here, 2250, getting pretty close. Would also not bode well if you're bearish on XLE or energy here in the short term. And we're seeing some names bounce even after a continuation of their, or resumption of their slide. LNCO was down yesterday, up 1.3% today, but you can see the volatility in the name. Had a nice bounce 2 days ago. Beautiful bounce, actually. And so, energy is going to be something to watch here going forward. See if oil can settle down. We'll see energy stocks settle down, and the market maybe will settle down. You can see the buying action just got so frenzied yesterday that right at the session close, there was a spike up to almost 213, 212.97, I believe it was. And just amazing to see it in this market. I guess a market where literally the supply of stock is dwindling because each dip is getting bought. Corporations are buying back stock at record, utilizing record low interest rates to borrow money, buy back stock, and we have less supply. More demand, as the Federal Reserve says they're going to be patient. So who knows what patient is these days. Been saying it for how many years. I don't think they're ever going to raise interest rates. But what do I know? It's only been going on every year. There was a Twitter post yesterday from a great follow, Rudy, talking about how the headline said, Fed Reserve will start raising interest rates next year, and how that's been the same line since 2008. When they started zero interest rate policy back in December 2008. I recall it vividly. I mean, Ben Bernanke was talking 2010 as when they were going to start to normalize rates. Well, 2010 came and went almost 5 years ago, and here we are. Still talking about next year. Oh, there's always next year. That's what the Chicago Bears fans say, right? So you can look at the spike. I mean, just amazing when you have the market really finding a bottom as it did and then rallying out of the gate on the Fed day on Wednesday and continuation yesterday. Really massive Christmas Santa Claus type rally and this big spike, kind of indiscriminate buying. I don't know. What does that tell you? Does that tell you that? And then if you look back in 2011 when we flash crashed to the downside, we ultimately fell below those prices, even though we fell 10% and rallied all the way back to being down only 2% mysteriously somehow. Same thing as here. We've got up to 213. We didn't close at that level. We came back to what was the price at the time before the spike. And I would think that at some point we're going to surpass this level. I think that's just what's going to happen. It's kind of like a signal, those market maker signals, little hand signal there, although everybody saw it. So let's look at some charts, individual names. Again, Whole Foods bumping up against long-term support resistance, broke through it as it did previously this week. We'll see what happens here. Again, I look at the long-term picture for Whole Foods just from a chart perspective. I see a head and shoulders pattern. I see a left shoulder, a head, and a right shoulder forming here, and I think it's going to at least come back down to this neckline. And then if it breaks, we could be looking at significantly lower prices. But hey, in this market, calling for lower prices is like, I don't know, standing in front of a bus and hoping the thing stalls out before it runs you over. Apple. Apple was a great move this week to the downside. Look at this candle. Still, the candle's pretty bearish here. And if you look, actually, it's pulling back here. The market's just open for trade. And I'm going to get off the mic here so I can get into the audio at the chat room. But you can see a nice candle here to the downside for Apple. SPY is a dividend day, so even though it looks like it's down, it's really not. Let's look at the QQQ. That'll be a little indicator. And then we can also look at the Dow Jones Industrial Average. There's a quadruple witching day. Let's look at Google, because Google above the $500 level looks really sharp here. It's support resistant. Look at the heavy volume here. Let's look at... we want to look at some of the gold miners and some of the mining stocks. FCX, I still love this for downside. If you look from a long-term chart here, we got to get back up to 26. Even if we kiss that, it's over. I think it's curtains for FCX. JB at Option Millionaires wrote a great post about some of the gold miners. Look at GDX. We're down still. Look at this. We're down 1% today. It looks like it's just going to continue to melt. The gold miners are done. And let's look at energy again. It's flat. We'll see it come up, and if it consolidates here, doesn't break over to 80, this is very bearish for energy. All right, I got to get in the chat room. The market is open for trade. The weekend is coming. Everyone have a great trading session. The SPY has offered some significant gains. It's been a miraculous run off the lows this week. We'll see if it can continue and see if we get another fat finger trade to the upside. Always watching that. It's interesting, isn't it? It's just great in this marketplace. Anything can happen. All right, UPB, I'll see you in the chat room. Goodbye.